Welcome to the coffee shop, everybody. This is your host and barista, and in today's video I'm going to show you how to avoid false breakouts, so you know what to do if you want to stay on board. Like this video and help the algorithm. I can get juice that way. Also subscribe so you can get updates for the next ones. Let's do the thing, people. False breakouts, yeah, they suck for everybody, but after today's video you will not get burned. Middle of recording this video for you guys and just setting it up, and I want you to be able to just watch something, okay? Like in the video, in the earlier part, you need to have your 50 and your 20 period moving average, right? My 50 is yellow and my 20 is white. Now what you're seeing here is price is kind of staying away from the 20 period moving average, but then all of a sudden it gets stuck to it while it's flat. This is a ranging area, okay? And you can tell it's a ranging area by looking at your algo and looking at your volume, your bull bear power void. Now, just because these candles are outside the void doesn't mean it's not ranging. What's happening here is you have a lack of volume to the downside, okay? It's just kind of wavering around. There's some small trades going in here. This is volume still being pushed to the downside, but there has to be some kind of relief. And you can see that on this chart, I have my anchored view app right here, okay? That's right here. That's why it has a background on it. And what I want you to know is that when you see this happen, okay, a lot of people decide they're going to start going long when they see a breakout to the upside of their 50 period moving average. Be very careful. You have to make sure that it is not simply another high in your RSI. If it's a high in your RSI, it doesn't mean you trade to the upside, because look here at the previous one, right? You see here, you didn't get a majority break over, but you are over your moving average. You're over your 50. And you can see that the 20 and the 50 are in the middle of crossing over. Okay, so you wait for another candle. You see here that you have a majority break to the upside, right? You are closing, opening and closing above your 50 and your 20, and they are right side up. The 20 is now above the 50, right? But if you look down, okay, this looks like adequate movement. This is momentum. This is volume, okay? This is why you need to have volume on your chart at the bottom, momentum just above it, so you can actually just read your chart very easily and see, am I getting caught in a false breakout? Okay, you can see clearly you are above your 50 and 20. They are right side up and they are moving in the right direction. But why do you not enter into a long position even after this engulfing candle? Okay, you have another engulfing candle that shows up here. You still do not enter for a long position. Why? We're talking about this one right here. Okay, here's your majority breakup, but look at your bull bear power void. You are in a non-tradable area. See the background? It's black. You have to watch your volume. That is the purpose of having this here. Now, you enter a short position here. Why here? Well, you need a new high. Where did your Heiken Ashi break above and close outside the range last? Or where did it close outside the range last? Okay. I'm looking for a close. This candle closes at open, high, low, close. It closes below the 10. This one closes outside the range, okay? So here is your high. This is your swing high right there. Take your Fibonacci tool. You are trading, is this through a range? No, you are not trading through a range. You are with momentum, okay? This is momentum. So you're gonna take your Fibonacci tool, go to your high level, same one that you just marked, drag the white line down to your entry candle and go to take profit 3. Right there. Drag this down to take profit 3. And look where it gets you. Let's see, right there. Okay, you just barely made that one. Now, as I said earlier, you are not expecting this to be a breakout to the upside, just like here, just like I described back here, right? Let's take a look at this. You see again, you're breaking out majority to the upside, okay? Majority break to the upside right here. You have another light green candle in a non-tradable area. This is a move to the downside. That's just price making a high. It's going to come back down. So I'm leaving this trade open to this level. That's what I'm doing right now. So let me go in for a sell position. I'm gonna do it on, I'll just do it on 2 Bitcoin right there. I'm gonna do take profit right at this level. And my stop loss is gonna go for right here. This is actually a new calculation. Like as it came up here, I can recalculate my low, okay? Because my trade isn't finished. And I'm gonna go up here for my stop loss right there. Now, in the grand scheme of things, I know what to do here to get the full move, but I'm not gonna bother with it. And I'm just gonna let it play out. It's already pulling back $1.40, right? As soon as I just entered that. And I'm just gonna let it see how it plays out. And that's it. So I wanted to let you guys know how to avoid the false breakout, okay? You get one here, you know what you're looking for. You get one here, you know what you're looking for. It is a high, right? It's a breakout, but it's a high in a non-tradable area. Here again, you get a breakout, a high in a non-tradable area. This is obviously a continuation move to the downside. So it said $1.40, now it says $3. All right, guys, so just to update you real quick on what's happening with this trade, I've already recorded the initial part of this video. I've done the edits for it, and I let this trade just keep playing out on its own in the background. And what I did was, you did notice that I did adjust this take profit level because I really just want to go down to this previous swing low. I'm under the impression that where I entered the trade, which was way up here, right? I entered the trade up here, and I'm under the impression that it's just really going to go down this far to the low close, and you can see that that's basically where I set my take profit. But the interesting thing is that this background, this red background, starts to show up, and I didn't know that any of this was happening because I was in the middle of editing the video while it was taking place. The original take profit was already at like $1.40 or $4 or whatever, and now it's at $112.21. And again, I'm still on the 5-minute chart. Nothing has changed, okay? You can go back to the original part of the video, and you can see like all of this, like this price level still the same, this price level still the same. I have not changed anything. This is a strategy on making sure you do not get caught in false breakouts. That false breakout that I saw was here. You got a majority break to the upside, but I noticed that there was no volume adequate below this. And I haven't opened my bull bear power void yet. I drew this trend line based off of one thing, just off of one thing. You had a false breakout here. These highs were way too low, okay? My initial position of the trend line was here where the wick came above the midline, but the close of the candle did not. That is a high, okay? When the wick comes above the midline and the close does not come above the wick line, above the midline, that is a high. You can always set that as a resistance level if you like, and then you would definitely enter your short trade after you've broken back down through there. This, now we're talking about this line here, right? Let me just kind of color this one so you can see what it is, what's going on there. You see that false breakout took place here, right? It hit the trend line, but all it did was give me a new trend line because the original trend line was here, right? It was from this high to this high that was just a touch of the midline, right? This is where it came to, okay? And this is where it was. Now you can see this long candle came down, a new one came up and started bouncing above it. But that just told me that, hey, this was also not a move to the downside. This got stopped by a support level, and I want to see what's going to happen. So all in here, I did not trade. I didn't do anything. I just want to see what's happening with price action. I wanted to break a higher high, a higher low. I needed to break out of the range of the algo. Here it broke out of the range, but it did not break the support level. And in that area, there was no tradable volume to the downside in the bull bear power void. So now let's open the void and let's see what it looks like, right? So I said here, there was not tradable volume. And sure enough here, a lot of volume to the downside, no background color. So I was not supposed to enter this long trade because look, no tradable volume, right? I have a break to the upside here is where we started the video. I'm above my moving average and they're still upside down, but it doesn't really matter right now. I don't enter short, I don't enter long. This kind of tells me that, hey, this is some kind of a range here. You can mark this out as a range right there. I'm in a range, right? I'm really just getting out at the end of the range. That's all I want to do. We finally have movement to the downside off of here, and it's a candle that broke below the moving average, right? We have tradable volume. This low is lower than the lowest low in the non-tradable area, right? It's lower than that most recent one, which means it's a move to the downside, but it does not break outside the range. Now, moving on, we finally get a break outside the range. That's here. If you look, it's lower than this low and lower than this low. So it's a nice move to the downside. This is your entry. You would not be able to do this correctly had you not marked these two highs, one here and one here. If you didn't mark them as your trend line, you have to do that. So you see here that this candle broke down below your trend line, and it's getting real tight into this support level. I only think it's going to go down to that support level. All right, guys, there you go. So that is real quick how you avoid false breakouts. And those false breakouts can do a very good thing for you. They can give you new highs to set in your downtrend of your trend line, like we covered in the previous video. Now, some of you are going to wonder how the trade played out. Well, go ahead, take a look at the screen. Right here, you can see where I started my short sale, right? And where it ended the short sale automatically. Go back to the beginning of the video, and you can see that that is the price level of where I set the system to buy back the shares or close my trade automatically. And sure enough, if you look at the next candle, you'll see a super long rejection. It looks like everyone was taking their profits off the table right at that point, and I got out a little bit early, which is a good move. You see that really long wick sticking down on that very last candle. That means price came way down, and then it got pulled way back up. So that means a lot of people are also buying in that area too. So price might move back to the upside for another high level, but I didn't want to take a chance with that. So anyway, avoiding false breakouts can save you a lot in the long run. You will not enter your trades in the wrong direction. So everybody, enjoy the rest of your day. The weekend is coming. Hope everybody has a good time. Peace out from the coffee shop.